Hello friends, Namaskar दोस्तों, very warm welcome to another discussion of global macro and markets with SD. मैं हूं SD Shanando Dar, multi-asset trading and investment specialist. Special thanks to members. As a token of thanks, this video will be released first for you, then for the general public. Thank you for joining my channel. Now, let's start. So first, we definitely look at what happened last week, but before that, we want to take a look at what are the key data that are coming up. Like today is 28th and it's Saturday, so Monday onwards, we are going to have a lot of data coming up. So next week will largely be dominated at the beginning by the Chinese PMI reports that shows how the Chinese different sector, industrial and services, how they are doing. This data will be important, especially for Chinese stocks and base metals. But China market is in a long holiday, so that you have to take into account. Okay, the impact may come later half on the week because initially we are having holidays in China. So this PMI data will dominate the base metal and Chinese stock market. In addition to that, we'll have inflation data as well as manufacturing PMI and services PMI data from all across the globe. We will have data from Europe, as you can see, PMI, China PMI Monday, and then we'll have lots and lots of PMI report coming up from Europe and across the globe. And in addition to that, we'll have some of the inflation readings, which will be more important for Euro USD and to understand how the rate cut or how the central banks will progress in terms of rate cut or rate hike, largely rate cuts. Currently, no one is talking about rate hike with inflation significantly declined. Now we'll have another speech from Powell, but it may not include any kind of market comments, monetary policy commentary, but it is, or it may include monetary policy, but this is an important event that you want to keep a look on. But main event for the week is later part. This is another data, ISM manufacturing from US. This is going to be very important. Inflation data will be very important for Euro USD. Lot of Federal Reserve speakers, Bostic, then we have Cook, Barkin, Collins, lot of Federal Reserve presidents will be speaking and they will be influencing the interest rates market. And as they influence, currencies and other assets are going to get involved as well. But the main mega data for which the market is going to wait for is coming on Friday, which comes almost every first Friday of the month. That is the US unemployment report or the non-farm payroll report. This will generate immense volatility. This will be a significant turning point, could be for gold, silver, currency market overall. So how the employment, if the employment declines, that will see a sharper drop in the interest rate and the US dollar in anticipation the Federal Reserve will cut interest rate faster. So इसी बात में चलिए, currently let's go to topics and I'll go to central banks. Central bank may I'll look at the Federal Reserve. This is, by the way, me, Ian Macro Micro. This is my favorite macro analytics website. Now, market is full year. They are pricing 125 basis points rate cut. So that means in the next meeting, another round of 50 basis points rate cut market is pricing. Then only 25 in December. So looks like market is currently Fed is not projecting three rate cuts. It is about projecting two more rate cuts. But market is ahead in pricing. So this data, if the employment comes on the stronger side, there will be a repricing in the bond market, which is currently pricing over dovish Fed. So Fed, it goes for 25-25 next two meeting instead of market expectation of 50-25. Obviously, interest rates going to go up. And as interest rates go up, those who have done my class from the intermarket analysis, dollar is likely to go up as well. So dollar has been in a bearish mode, so it might see some recovery on the non-farm payroll data. In addition to that, for globally, what I'm looking at what are the tension going on in the geopolitics space. And one of my indicator to understand the geopolitics is the maritime shipping, which gives you more real-time understanding of the data. This is the situation in Strait of Hormuz, and more importantly, this is the situation in Suez Canal, where the number of ships passing through the canal has significantly fallen due to geopolitical tension. And this has been a very, very important channel. You can see the number of ships passing through this channel has almost one. This has bigger implications to smaller implications, like this is bearish, this has been bearish for Egyptian pounds, because Egypt tend to gain a lot from this Suez Canal as the ships pass and they pay the fees. But that has changed. So geopolitics is still quite hot. हम लोग को समझ में आ रहा है geopolitics का जो situation है that remains on the sensitive side. And also China I'm closely looking at, because China has been weak. This latest stimulus has been extraordinary. If we look at the market, this is my setup fountain of gold. Let me make it the mother setup fountain of gold. And let's look at the Chinese market in the daily chart. This is the Chinese market. You can see what a massive comeback has happened in the Chinese market. And that has naturally fueled the base metal rally further. If you look at the base metals, zinc, strong up. If you look at copper, or if you look at a representer, say DBB, you can see strong up move happened on the base metal. And that's largely because of the Chinese stimulus. And now if the PMI comes on the weaker side, obviously the stimulus will need some time for impact. But if PMI comes on the lower side, we might see some correction in the base metal before further bullishness arrives. So one of my focus going forward will be how these Chinese stimulus is playing out. I'll look at hard data, which is obviously a delayed data. And in addition to the real-time data, I will look at more and these base metals and the Chinese stock market to provide me real-time information and how the stimulus is playing out. If the China further starts to turn bearish, then we have some serious issues. And once again, market will be very, very concerned if China could be one of the factors that's triggering the global recession this time. It's not easy to predict which will be the trigger, but China definitely in my radar because of the weakness there. But if the government is decisive, I don't think more of this is more because government will be supporting the stock market. That's why we have seen the movement, but we need the recovery overall in the economy in China. So that will be remain in my focus as well. If we look at last week's market, let's look at the foreign exchange. It's quite clear. You will be able to see that US dollar has been very, very battered. You will see this is the US dollar. It has been on the lower side. If we see over the last 1 month, this is the performance of the US dollar index, whereas there has been significant come up on the emerging market currencies, including China. So as the US dollar weakens, Federal Reserve started with the rate cutting cycle. When the rate cutting cycle happens, Federal Reserve, usually the dollar weakens. So the dollar is weakening. Is no surprise to us that the dollar is down, and a lot of currencies have been giving a very good move. Let's look at some other market like stock market. Which are the stock market that has been hot? One of them is obviously it's clear the China and the Hong Kong, the stimulus. It is setting these two are completely apart from the other performers. And if we look at the last 1 week, the extraordinary outperformance will be visible from China and Hang Seng, means Hong Kong. And that's largely because of these stimulus. And the underperformance has been Marvel in Argentina, Singapore. This has not done well. And whereas us where we are here, Sensex, we are on the positive side. of 1.22%, but nowhere close to the recovery what we have seen in China. And as I said, I'll be closely focusing what happens further to the index when market really digests up this news, this extra stimulus. After that, what happens? Now, after that, let's look at the commodities. Which commodities? Obviously, one of my bets remain with the gold. Natural gas made a solid comeback. So we have in our commodity videos, we have seen the natural gas comeback. This once again no surprise for us. What I like to highlight is a lot of agricultural commodities have been doing well. That is definitely something to take note of. A lot of soft commodities are doing well. That's why DBA, if you look at the base agricultural exposure, our agricultural exposure has done excellent because a lot of soft commodities have been going up and the dollar weakness is overall supporting the commodities. So next week, I think my main focus will be the non-farm payroll, how it's playing out, and overall the equity market still remains in the bullish mode. We are obviously near the recession cycle phase, but before the recession cycle phase comes, it's usually the euphoria phase. And no one can say when the euphoria rally is exactly going to end. Unless it ends, it is an awesome bullish for the equities. So far, I have different major is giving warning, but the warnings are still on the lighter side and the equity rally is still broadly continuing. I'm participating via different stocks and others. I'm also participating via gold, different commodities as well. So I hope this video helps you overall. Agar help ho raha hai, don't forget to like and subscribe. All the best from my side. And as always, happy trading. Thank you once again for watching my video.